In the early 2000s, global markets were shifting under the weight of a decentralized force that institutional investors could neither identify nor stop. This capital originated from a hidden network of suburban stay-at-home mothers in Tokyo, operating entirely outside the traditional banking system. These women moved billions of dollars in daily transactions while remaining completely invisible to global financial monitors. The banking sector faced its most persistent competitive pressure from the exact domestic demographic it had spent decades ignoring. The 1980s Japanese asset bubble created a period of extreme domestic wealth, but the 1990 market collapse brought that growth to a sudden, permanent halt. To prevent a total economic spiral, the Bank of Japan lowered interest rates to zero. This effectively ended the growth of personal savings. This freeze collided with a long-standing cultural dynamic where Japanese husbands hand their entire monthly paychecks over to their wives. These women manage the household through the Pakeibo system, acting as chief financial officers for family expenditures and investments. Under zero-interest policies, these kitchen table CFOs watched their savings accounts stall. Meticulous accounting could no longer protect their wealth from stagnation. This lack of traditional returns forced a highly disciplined demographic to look beyond the Japanese banking system for higher-yielding opportunities. They identified a specific macroeconomic loophole that would eventually be known as the yen carry trade. This diagram illustrates the first step. Traders borrowed Japanese yen on margin at 0% interest, immediately converting it into high-yielding foreign currencies, like the Australian dollar. Holding overnight, they collected the interest rate difference, capturing a steady yield independent of currency value fluctuations. The mechanical nature of this strategy allowed individual households to scale their modest savings into a global financial force. These mothers formed the FX Beauties Club, a decentralized network where they shared complex trading charts and market analysis while managing their domestic responsibilities. This collective, which the financial world named Mrs. Watanabe, was soon trading an estimated $9.1 billion every single day. This decentralized network eventually commanded 25% of Japan's entire retail foreign exchange market. Yukiko Ikebe, a mother of three, perfectly embodied this trend, quietly analyzing market data between her daily chores. Ikebe used technical indicators to identify macro-level price reversals, entering the market at moments that many institutional traders overlooked. She was so successful that she amassed an 800 million yen fortune, roughly $8 million, without her husband's knowledge. Ikebe's success demonstrated that the discipline of household financial management provided a functional foundation for high-stakes currency trading. Eventually, the sheer volume of capital being moved by these households triggered institutional alarms at the highest levels of the Japanese government. In 2007, the National Tax Agency launched a sudden raid on the home of Yukiko Ikebe. Authorities accused her of funneling her massive trading profits into her relatives' accounts to avoid high-income tax brackets. The trial resulted in a criminal prosecution and a staggering 500 million yen fine. The prosecution of a single taxpayer effectively de-anonymized the domestic housewife economy, exposing their methods and scale to the global market. The trial results sent a shockwave through the global business district as hedge funds realized the true source of the Mrs. Watanabe market movements. Major institutions were forced to reprogram their multi-billion-dollar algorithms to specifically track the trading patterns of Japanese mothers. The Mrs. Watanabe phenomenon serves as proof that with specialized data and strict discipline, retail participants can force even the most advanced global systems to react to their movements.